Candlestick charts are used by most traders, but many beginners don't know how to read them properly. In this video, we'll learn how to read candlesticks step by step. Let's start with the basics. Each candlestick represents one time period. That could be 1 minute, 1 hour, or 1 day. Every candlestick shows 4 key prices: the open, the high, the low, and the close. The body of the candle shows the open and close. The wicks show how far price moved during that period. If the candle closes higher than it opens, it's bullish. Bullish candles usually appear green or white. If the candle closes lower than it opens, it's bearish. Bearish candles usually appear red or black. The size of the candle body matters. Large bodies show strong buying or selling pressure. Small bodies show indecision in the market. Now let's look at the wicks. Long upper wicks show price was rejected from higher levels. Long lower wicks show rejection from lower levels. This tells us about buyer and seller strength. Candlesticks reflect market emotion. Fear, greed, hesitation, and confidence. One candle alone doesn't tell the full story. You must read candles in context. Look at where they form on the chart. Near support, resistance, or key levels. A strong candle at a key level is more meaningful. Beginners often focus too much on candle colors, but structure and location matter more. Candlesticks help you read price behavior. They do not predict the future. Use them to understand what price is doing now. With practice, this becomes natural. Quick recap. Candlesticks show open, high, low, and close. Bodies show strength, wicks show rejection. Always read candles in context. They reflect market behavior and emotion. In the next video, we'll break down candle anatomy in detail.